Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, so let's take a look again at the euro currency. So as you can see, situation is changing day by day here. Only yesterday we said that the last chance probably for market to show at least some bounce out from the 105.25 pip support and trying to show at least some action according to the daily Henshaws pattern is the relatively hawkish comments from the European Central Bank. So if this will happen, if Mr. Draghi will give the hint on the possible contraction of the quantitative easing program, so reduce the pace of the some stimulation of the economy with the cash, so it's maybe euro will show some bounce up, and this indeed has happened. So you can see upward action really has taken place here, but so overall action is not really very significant. So on the daily chart you can see, despite the recent rally, market mostly stands inside the range of the Friday's rally. I mean Fridays of the last week. Still, as you can see, we've got here the pattern. This is not really strong pattern, but this is at least something. So you can see we have the bullish grabber has been formed here. Personally, I prefer the grabbers a bit another kind. So for example, like here, so market stands in upward action, shows the grabber, and then shows upward continuation here. It's a bit quite different story. So you can see market mostly stands flat, and this grabber actually is weaker. That's why yesterday we said only the confidence trader right now think about the taking the long position. So if you feel confident still, here's the pattern. Here's the validation point right now. Due to this pattern, we know with the more precision the possible area that if market will break it down, this probably will be the final destruction of this overall construction, and will be the way to the downside. So for the bears, nothing has changed significantly. As we said yesterday, expect the breakout, wait for a breakout of the support. If the breakout will follow, this probably will mean that market is returning back to the downward action. For the bulls, it's vice versa. So this last chance, last barrier, last edge for taking the long position. Currently you have the pattern. So personally guys, I prefer better signs of the upward action for taking the long position. I prefer the clearer thrusting signs or something of that sort. So I do not like the sideways action if the market forms the grabber. It's not my choice for taking the long position. But if you feel confidence, because currently this will be probably some kind of the pain on gain situation. So if you will make the bet on the upward action, indeed, for example, non-farm payrolls will be poor, so the position will be correct. But this overall situation, when you do not have clear technical support, technical background for taking the long position, and you rely only on possible statistics and data that will be in your favor, this is a bit too small context for me. So I prefer to get also the technical science on my back for taking the position. So, but still, as I said, market still hasn't broken yet the major level. We have at least some kind of the bullish grabber, and theoretical chance exists. So if you will confidence, you could try to make the long position you're trying to take. But as I said, I'm not really think that will be very good setup overall. So on the 4-hour time frame chart, guys, you can see that market has returned back up to the resistance area. So big probably could be treated some kind of the neckline. So this is how we can show this pattern, or you could treat it just as a ABC picture. Anyway, if even market will show this upward action, that's probably will be just retracement, just deep retracement. So the target of this pattern will be somewhere around 107 area. In today's session, at least prior to the non-farm payrolls will happen, we should watch for this setup. So you can see that the wedge pattern still has been broken up on the European Central Bank comments, so we partially were correct. And right now we have this large ABC bottom in place. So you can see on the way up, market right now is calling around the weekly pivot point, and it has reached the 618 minor target. So that's very important pattern, because if market indeed is bullish, it should not show too deep retracement here. It should not return back to the lows, because this is minor extension. When the market hits minor extension on the way up, and it's really bullish, it should show not really significant retracement, and it should continue move higher later. If this will not happen, market return right back down, the chance on the downward breakout will increase. That's the pattern that we should watch for right now.